Okay, good evening and welcome to the final class in the series of QuickBooks. For those of you who are interested in a review class, if we have some interest, some raise of hands or through email request, we could do one more class to bring it all together. Right now in this class, we're going to do two things. We're going to discuss a little more in detail the reports, the various reports that we can make, whether it's P and just the profit and loss, which we've been doing until now. We've done comparisons. There's just account receivable reports. We've done that a couple times in checking open invoices. You can make a report just to see your sales. You have sales by item. You have sales by customer. We have also jobs and cost, if you want to see what your cost is. We also have the accounts payable reports. We've seen it in the paid bills method, but we can also see it in the bill tracker. We can also see it in the reports. Another thing to notice is that we'll learn about class, so how to activate class. We discussed briefly if you have several locations, so we can have merchandise being sold in more than one location. We want to find out the cost to operate a store against its profit. Another thing we need to discuss today is what's called a statement of cash flows report, which is also in the reports menu. We have not done that yet. So let us begin by sharing the screen. And let's assume that we're gonna also utilize what we had last time, is the Windows feature where you could vertically put reports one beside another. And let's see a question here. Prior to all that, we're going to make one more journal entry. If you recall, I mentioned, if you didn't recall, I can mention again now, that right before page 3 of the syllabus, where there's shortcuts, there was one line: deposit $250 personal, I guess that would be equity to cover the bank. We never did that entry, but it's fine because now it's the end of the year. We just finished December 31st. We can make what's called an entry because we realize that we have cash, and you could enter it in the register, or we could reinforce the skill of doing journal entries. A company make general journal entries. And what we are doing is similar to what we've done in the past. We will go Y minus, because Y brings us to the beginning. 1 second. Let's do it one more time. Y brings us to the beginning of the year, right? Y brings us to the beginning of the year, and minus will bring us 1 day behind, right? That's the shortcut. We do a plus, it's 1 day forward. A minus, it's 1 day minus. And what we're just going to do is we're going to credit the bank. So we debit Chase, type CH, and we're going to put in $250, right? The asset goes up on the debit side. Think about it, the equation. The A is on the left side. The assets, right? 2 equals liability and owner's equity. And that's 1 plus 1, or 0 plus 2, or 2 plus 0. However you would look at the right side of the equation. So you have Chase and you have Reuven equity, right? Remember, it was Reuven equity. We'll leave it open for a second here. Okay, Reuven equity, 250. And before I press enter, you'll notice on my balance sheet, the wrong window, my balance sheet, I have negative $240 in the bank. You can ask me why. Hopefully your balance is the same. After last class, we paid National Grid. We have Mrs. Fine as a check. However, it worked out. By doing this journal entry, it will actually bring us at least a positive cash flow. Save and close. And now I have $989 in the bank. Now, the bank is not going to be affected by cash or accrual because the bank is the bank. The bank is cash by definition, right? My assets, my receivables, that line might change from 204 to another number based on what my income is, but the cash will never change. Okay, so that would ties out first making another journal entry. Again, what I just did, if I open my bank, is I deposit $250. And if I'm in Control Y, we see what the debits and credits are. So on the keyboard. One second. Okay. I have to highlight the transaction. We highlighted, we highlighted it. Okay. And the debit is the Chase, the credit is Reuben's equity. So this is what we see behind the scenes is how QuickBooks takes care of the journal entries. Interestingly, we did over 64 transactions in this entry method. Okay, so we have here, first of all, going back to class 15 in the syllabus, we had number one, list fixed assets. This we discussed last time. If we go to list and fixed asset item list, we don't have anything here, but you would be able to have entered it when we added the assets. When we added a copier, it told us QuickBooks gives you the option of tracking assets. And that way it would also be able, you put in the purchase description, you put in your cost, and you would be able to run depreciation through QuickBooks if you gave it the depreciation method. There are a number of ways we do depreciation method. We do depreciation. We discuss what's called a straight line method, whereas you take the $1,200 of the copier, we divide over 5 years evenly, $240 per year, $20 per month, and had it been bought in the middle of the year, it'll be $120 depreciation. We start from November, so we claimed $40 depreciation, and the year will be, the depreciation year will start again in January to December for $240. The final year, it would end at the end of October, only $200, because so we have year one and year six. Year one got 40, year six got 200, but it's altogether 5 fiscal years. Okay, so we did also the batch enter transactions. We discussed the lists and the accountant. We had batch enter transaction that we did in the last class. We discussed if you would copy and paste. Interestingly enough, it does not work from Google Sheets, at least when I tried it. But it worked if I had a Google Sheets spreadsheet and I copied it into Excel. Then when I copied from Excel into here, it would work. You can have a list of transactions by date. You could put in the payees. You could put in even the accounts. You have to pre-fill them, right? If you're not sure, you just want to get into QuickBooks, you could do ask my accountant. You could copy everything as ask my accountant. The amounts would go in, and you would see on the bottom, for example, if I put in 10, 20, and 30, I would have a total of 60 in the bottom right corner. So I see the total of my entries, and once it's in there, I can later on go to reclassify, right? We discussed reclassify if we have client, not sure if we did actually, but we have here under client data review, reclassify transactions. This is only available in the accountant version and in the enterprise version. The regular QuickBooks Pro does not have this, and it's an invaluable tool. You don't have to double click on each entry and change the account. You can just go into the say advertising expense, and you realize that AMI wasn't really advertising; it was really a subscription for for 3 people. So then you could just go select it and go on the bottom, and you could change the account to dues and subscriptions. And under the expenses, you can have, it's not even in this, but you can even add it. In the service business, we don't have dues and subscriptions, but it would be, if you get the point, this is if you had a bunch of transactions. See, rent expense, interest expense. Not everything is done multiple times. To go in the profit and loss accounts, we'll have more items going on here. If you realize you messed up and really your cost of goods are really your services, and your services are really something else, you'll be able to highlight. Um, second. What's that showing up here? Oh, include journal. Some of these things come from journal entries. Okay, here we go. So we have interest expense that came through on the journal entry of $500. If you want to reclassify it to actually being a different expense, you could do it over here. I would recommend you take a look at your journal entries to double check, and you'll see maybe it's more involving than that. But this is what the tool of reclassify is. We have now back up to the report center. We have here in the reports window. Actually, we're going to start with report center. We took the view in customers. We saw what the customer center looks like. We went to vendors. We saw the vendor center. We saw employees. We saw the employee center. We have 3 employees sitting here and waiting here for the payroll. So we also have what's called a report center. Report center is like a bunch of icons showing you what type of reports you can make with the data that's entered in your QuickBooks. So example, if you have here customers and receivables, they'll give you a few options that you could get an idea and layout of what your customers owe you, because we know we have some customers owing us money, and we want to know as of today, what are we owed? You can also have customer balance summary, balance detail, and transactions by customer. And you go down, it gives you a lot of options. So let's start with one. We'll take the first one, AR aging summary. If you double click on this, we have here 3 open invoices, a total of 1352. And actually, there's only one open invoice. It's Rabbi Gabay. Ploni Amoni is wiped out last time. Chaim Yanko, we had $75 open, but we went and we paid it off last time. So he's down to 0. If I wanted to look at my sales for the year, not just my receivables, because receivables is only $1,300, I would click on sales, and I could do sales by customer detail. And this will give me a detailed description. Actually, not this month to date. I want to look at last fiscal year. It was last fiscal year, January 1 to January 31. When I open this report, it'll give me a detail of everything Rabbi Cohen bought. You see the memo. The memo will give you the description that shows up in the invoice. We have the dates of purchase. We have by the item. We could see what TLS, HK. It merges the invoices into a report. You have Mrs. Cook. She got her housekeeping for $140. And this is all the sales. It's not discussing whether it was paid or not. This is what's called a sales report. And in contrast with what we had before, which was the receivable report, which is what is still open. In other words, from the $3,300, which is the total of sales, we collected about 2,000 of it because the other 1,300 and change is still receivable. If you toggle the cash button, that would give you actually that amount, because cash tells me what I got, not what I invoiced. So I see this is $2,030. This is $3,390, and the difference is the open invoices. So again, sales under accrual, as we discussed multiple times, is the sales which include invoices. Cash is the sales that we actually got, and the difference is still open as receivables. And this leads us to the next thing in the next report, which will be vendors and payables, right? If we go to vendors, and I want to look at my accounts payable for last year. Actually, what am I going to see? I'm only going to see what's still open. What's open is $575. We know by heart already Con Edison was unpaid, and our books are unpaid. So the payables is the mirror image of the account receivables. Account receivables is what we still need to collect from the customers. Payables are what we owe to our vendors, and we see that some of them are going back a couple months because we ended them back in June. If you wanted to know what your total report of purchases, what's the expense? Actually, I'm looking for expense report here. Purchases purchased by vendor detail. Again, we'll go to last year. And again, there are multiple reports, and you have to just sit around and play around with what would work best for you. And again, if anyone has a particular report they would like to see, they can ask that, and I will try to demonstrate it to you. We've had in the past people said I have such and such a business, and they're trying to figure out how to make this type of report, how to enter this information. So by the end of the course, if your question is not yet answered, now would be the time to ask how we do this, how we do that. Okay, so then the purchases report is only on the merchandise, because that's what purchases is. Purchases is cost of goods which we sell. So this report is not going to come up all our other expenses such as office supplies and utilities and rent. That's not coming up on our purchases report. Where would we find that? So that you could find in company and financial. I believe it's invoice, expenses by vendor, detail. Okay, so we're going to scroll down to the third. If you're doing it now, company and financial, you go to the third level. We're not looking at the profit and losses. We're not looking at we're looking at income and expenses, but expenses only. And then we'll go back to the P&L and see how the P&L puts together the expenses and the income. So again, we're going to go this last fiscal year, expenses by vendor detail. And this is where we're going to see our AMI magazine, our Con Edison, Essence, National Grid newspaper, and $2,500 of expenses. This is what we actually did in the first 3 pages. We had our expenses, and that total was listed in the summary of bills. But the expenses don't include the purchases, because purchases are not expenses. Purchases is what you buy and you put in inventory. So a purchase only becomes an expense after you go to a sale afterwards. If you recall the step that what happens is when you enter a bill, So what's really happening is you're crediting a payable and you're debiting or you're debiting inventory when it arrives. So now you have new inventory and you have a bill. When you pay the bill, so what you're doing is you're crediting your cash and you're debiting the payable. But nothing happened. Right now you still have the inventory. Purchases were not expense. Purchases bought you inventory. So therefore in the purchase report, we saw purchases, but it won't show up on an expense report. Only when you make sales, that is when you have an actual expense. That's when we credit inventory and we debit cost of goods and we credit sales and we debit and that was an all involving entry. There were like 5 entries in that. We'll open up in a second one of those sales, like Rabbi Gabbai of TLS, and we'll see what happens over there. Now, these icons, which gives you idea and names, is in essence the exact same thing that you would see in the drop down of reports, of company financial, and it gives you in a line. But again, some people like to see pictures and images, and you have the same thing. You'll find the same expenses by vendor detail, exact same report. But again, you have to make sure to choose last fiscal year, and you get the exact same report. So you can do it from the center, or you can do it from the report. It's all the same. You could use a graph, if that looks better to you. Some people, you can open the pie. Actually, this is accounts receivable graph is nothing because there's only one. In company and financial, you could also get graph reports over here. Income and expense graph. So this one is all encompassing. Last fiscal year, you have a legend, and it tells you your whole breakdown. What your taxes was 28% of your expenses gone. Homeowners association, payroll expenses, rent expenses, interest expense, and your total expenses is $9,520. Where's your income? Your income is not even here right now. You have actually the green is the income. That's what the legend says here. The bottom shows us that there's a shade of green, which is property tax. So we'll go figure that out. And let's close this out. Reports. So it's the same thing you have here. I have this report choices in the drop down in the menu superimposed over the report center. So here's your company financial, and here you have company financial. You have profit and loss standard, profit and loss detail, year-to-date comparison, profit and loss by the job, by class, which we discussed before. Right now we don't have several locations, but that would be an option to choose if you enabled it. If you would go to edit, preferences, and from edit preferences, under accounting, you could use class tracking. And they ask you if you want to prompt them to sign classes or not, but this is where you enable it. Once you enable class tracking, that is when there'll be in every invoice for billing a customer, and in every bill from a vendor, you have another column. Right now, when we create an invoice, Control I, we have see, take the service invoice, for example, back to service. Right, we told you the item goes first. If I have HK, my housekeeping, actually, no, we want to make more money. Let's say web design, and the rate is $75. If I would enable class and I have an office in New York and an office in New Jersey, I'll be able to have another column here saying, is this income from a New York location or if this is from a New Jersey location? And the same thing is when I'm paying rent, I'll be able to categorize my rent as New York and as New Jersey. Yeah, let's demonstrate it so it will become more clear. And nothing like a demonstration. Going through all these reports, giving this is more like overview that you could see because there's so much you could do. It will take a few classes to go through one by one and comparing with everyone. But once you have an idea of how things run, you'll be able to go back and replicate this. So let's see here. We went to use class tracking for classes, transactions. And we're going to say prompt. We're not going to prompt it, but I could choose it. Otherwise, we uncategorized. Now it's going to close my windows and reopen it. Let's see, is it? It should. Let's see if did it save that choice. Yes, it did. Accounts are required. Use class tracking. Okay. Now I'm going to make an invoice. And here's class. All right, let's go back to the service. Now, there are no classes. We didn't create them yet, but I can create them. So, for example, let's say we have here Rabbi Gabbai. I could technically go back to one of these invoices, let's say invoice number 5, and I could say, no, this class was all New York. Why is that? The keyboard is giving me trouble again. Add new. One second. Okay, so I'll have New York class. And for the same price, I will assume that, okay, so we just created a class called New York, and I'm going to save it. And let's take, for example, 5-ish Glick, and we're going to put him as in a Jersey. Okay. Actually, we'll take something else. That's Gabay, Rabbi Cohen. Yeah, Rabbi Cohen we know is in 13th Avenue. Okay, let's take Berish Holtzklapper. We'll take him as New Jersey. And we'll just put in NJ. That'll be the rest that we don't do will be set up. Okay. Save and close. Now, when I go back to my profit and loss, or my profit and loss, right? And I say I want to see the class, right? And I give a class. It's gonna. Let me take. Okay, it's too involving. Let's take off the comparison for now. No comparison. You're able to see you have New York and New Jersey, so I can see that my allocated income is 3 columns. There's New York, New Jersey, unclassified. So you got to work in the unclassified and decide, is it going to my New York branch or my New Jersey branch? And the same thing will be expenses. You could allocate whatever goes from right to left. So this is another great feature, especially for analyzing. Someone has like 3-4 branches and he wants to know if one place is draining out the profits from another. So if you record your expenses by class and your income by class, you'll see what's profitable and what's needs to be downsized or eliminated. Then again, sometimes you have fixed expenses and you can eliminate it. Maybe you have a lease that you're stuck in and you just closing it is not going to save the expense. So these are all different things which you have to plan around and figure out what is the best option that would work for you. We did P&L, we did receivables. Again, reports. So sales by customer, a summary. Let's go to last year. Same thing, recall the 3990, 3390, but if you will do the cash version, it's in the 2000 range. And we know that the difference is the receivables. We have accounts payable that we also did, company and financial, um, vendors and payables, vendor balance summary. This is what is outstanding. Okay, so this is for the report of P&L, accounts receivables. I also mentioned before we're going to discuss statement of cash flows. So statement of cash flows is also on the reports drop down. Right? The first section deals with profits and losses. Profits and losses are affected by the income. The profits and expenses is what goes out, and between the income and expenses, that is my profits. And my balance sheet is the value of the company. And you can have a balance sheet by class, right? You want to know where your bank accounts are. If you have in different states, you can have Chase at this location, that location, because however it is done. And then we have at the bottom what's called statement of cash flows. What is statement of cash flows? Statement of cash flows is, if I go from the last fiscal year, and it's basically going through the year, the cash, so it tells us what we had from what's called operating activities. There's three categories. They go in gray: operating activities, investing activities, and financing activities. And I will explain these. And the reason why I'm also telling you this is not just to throw you extra information, but for those of you who may be interested in doing this QuickBooks certification, they refer to the statement of cash flows as well as possible questions. Doesn't mean 100% they'll ask it, but in some of the review questions, they have asked something about to this effect. So operating activities is the general operating of the company. So if I'll double click on it, you have the net income. Where do you get the net income from? This we pull up from our P&L. Let's see, a P&L in the, let's take the cash method. Cash method. No, a second. I think we're on the cash. Okay, cash flows is cash. And it tells us that our net income for the year last year was negative 6130. Let's take last fiscal year. There we go, 6130. This was our net income. That means, assuming that everything was paid for, right? 61, yeah, okay. So let's start with the accrual method. Let's say we had paid. We know that we didn't pay for everything and we didn't get everything, right? But the accrual method is including all the invoices. Assuming everyone paid up, we would have gotten 3390. Assuming we paid every bill, right, including all of our utilities, we would have had an expense of 9336. So our total income, 3390, minus our total expenses, would be a negative income of 6130, right? So that, as number one, carries over to our balance sheet, for starters. If you look at our balance sheet in the accrual method, as of 12/31, and that's how everyone asks, how does P&L affect our equity? Because our loss for the year is $6,130 in accrual. That's why we see that also on the bottom of our net income and our equity. Our equity, Ruben had put in $28,000, various inputs. He had $70 left over from last year. That's why it's called members' equity. It's the retained balance, what stays year to year. And if you wanted to know what would happen next year, like one day later, you would have the $70 positive and the 6130 negative. You would have a members' equity tomorrow, meaning January 1st, of negative 6060. Let's see this. Put it a plus, and second here, negative 60, right? Because that's what it does. It takes the previous, it puts together all the previous year's income. Like we know in taxes, we carry over losses from year to year. So if in 2019, we made $70, and in 2020, we lost 61.30. Going into 2021, we have a negative retained earnings of 60, unless obviously there are distributions. So this is the net income which carries over to the balance sheet. Now, looking at the cash flows, however, we say, 1 second, let's analyze this a second. It is true, where's the cash flows here? It is true that from operating activities, we had negative 61.30, but that's not the true cash balance. Why? We have to make adjustments, right? We didn't get the accounts receivables. So even though our net income was negative 61.30, we have to deduct the 1350 of income, which we never got, right? Which is not cash. So in essence, we would really be negative $7,400, right? I mean, besides the fact that we lost 61.30, that's if we that would be true for the cash of what we if we got all the cash, but we didn't get all the cash. So accounts receivables go out. But then again, we have to put back the money that we said we paid and we never really paid, because where's this adjustments to cash provided, the inventory asset and the inventory TLS. Without getting into too much detail, this is other money which we never got. Accounts payable, we said we paid in our expense report, included in the net income of 61.30 is what? Is if you look at the balance sheet, we have accounts payable 578. We did not pay this yet, right? It comes up on our expenses as if we paid it, right? 578. If we go look at last year, we need to take the whole year, right? Accounts payable includes, let's see, this wouldn't be a good way, 578. Let's look at our accounts payable report. Payables are vendors and payables, vendor balance. We owe this 578. So even though on the accrual method we're saying we lost 61.30, we're including 578, which was not paid out cash. So this is money which we have to put back into our cash flows. So again, when we say that we made money, we have to deduct the 1350 because we never got it. It's still receivables. And the same thing is we have to deduct the MR and TLS because out of inventory, we made it. I don't want to get lost in the inventory part. We'll just discuss the receivables and the payables. Payables we have to add back, and that's why it's not a negative. We're adding back as if we had the cash because it never left our bank. Similar to the paychecks that never left our bank. City cards we're adding back because we never paid the city card. We never paid Shimon. So it shows up on our expense report, but it's not money. So if you take the 61.30 and you take all these adjustments, so we're negative 45.30 in cash. That's operating activities. Now in investing activities, we invested in property. So the $202,000 never came out of our account because this came from equity, the $20,000 directly that didn't go out of Chase, it went out of Reuven's equity account, and we financed it with $180,000 from Chase. So, which leads to the next thing, financing. But for starters, the investing didn't take this cash out of our account. Same thing, accumulated depreciation. We have an expense of $40, but it wasn't cash that left. It was value of property, which went down. So we have to put back the $40. So at the end of the year, if you look at the investing, not only are we negative 45, we're actually negative $204,000. But then we had positive cash. We had Reuven's equity. Reuven put in $28,000. We got cash of $180, and we got a $60 value of money that of the adjustment to the first 30 svarim that we put in of TLS. So it's as if we're adding back new cash for financing activities. So again, operating activities is everything that would show up on our P&L, and we have to put back the money that will be on the balance sheet, right? We have to further deduct from the cash. We never got the receivables, and we never paid the payables, and we never paid the liabilities of City Card and Chevron. Investing activities brings our cash down because we spent more money, right? So we spent more money. Theoretically, we have less money. But because we added money from financing activities between equity and the mortgage, that's why we have a total cash at the end of 989. It's a way of tracking the cash. This might be a little confusing, but we'll give out, again, we'll send the report of the cash flows and after today's class, and you'll be able to make these reports and further on this, look into it yourself. So now that we have these three reports, I'm going to close actually a bunch of windows. Statement of cash flows this year. Okay, this is a statement of cash flows of what it would look like this year, and the reverse. Remember, we made an adjusting entry of net income of, we put back the rent of 500, we put back the rent of the supply expense of 71. So we had a negative income so far of 571, but we also have supplies that we put back because we never really, it's not cash that left, right? It's the cash never really left. We made an adjusting entry. We really came out of our supplies. So really there is no net change this year so far in operating expenses, and it's only operating activities. There's nothing coming up on investing and financing because nothing happened. Let's close out. Let's close the reclassify window. We're going to close the customer center. We're going to leave only three windows open. I'm going to show you how you can have these three reports side by side for comparison. Transaction by account. Home. And one more bit. Okay. Now we go to Windows and we're going to tile vertically. Now we tile again, Windows, tile vertically as opposed to tile horizontally, which gives you a wide piece of information we don't need. We tile it vertically, and there's now everything that we need could fit up in this report. So we could see here our P&L, right? We had it sorted by class and classified, but I could shrink, I could give it a little less space to the one on the left, and I could give it a little less space to the one in the middle, and I could drag over this one. You can resize it, and all of a sudden you have here a report by class. I could take out the class, right? This is saying show class, but if I would have just had the total, I'm not interested in class, it will be even a smaller report. It's all about customization, right? Tile vertically, you get everything in here. We have the P&L, the balance sheet, and one flows to the other. First, you have on the left side, English goes left to right, you have the P&L 6130, our net income over here 6130, and finally the statement of cash flows takes that 6130. So a statement of cash flows takes an accrual report and it shows you how you end up with the cash you had. Like, why do I only have $9 in my bank? I could have had $1 million in my bank, but I only see $9. Where did everything happen? So it gives you a whole discussion. Well, you lost 6130. You lost even more. You had less cash because you had 1350 that you never even got. You had less cash because of various inventory adjustments. You got back more cash because you never really paid this expense. You never really paid city card and liabilities, and you never repaid the taxes yet. And you have unearned revenue, which is a liability. So whatever it is, this is how they interlock one to the other. I will take pause for a second if anyone has questions. You might as well raise the hand and ask your if you have questions, do it in the audio. We also have about 8 questions left from the review sheets, and I'm going to send you all the answers as well. So following today's class, you will get the copy of where we're holding in the P&L for last year, the 61. So these are the numbers you look at for 6130. You look up for $9.81 in your bank account, $9.89, and the top of your balance sheet will be the end of your cash flow, right? We know we have this is the cash we have, and the cash flow gives us the whole story why we have that number. We will also give you the answers to the 25 questions that were originally numbered 11 to 35. So the answers will show up also in that format, 11 to 35, even though we are discussing them in bits of 1 to 8. Let's see what else we have here. Okay. Reports with the banking, with the reconciliation, and employees. If there's anything that some of you would like to have an awareness of, you think you should know about, you can raise your hand. Just for those of you who are excited about getting involved in the complex story of payroll, we have something. Remember, we discussed the I-9. This is what the I-9 looks like, the federal I-9. This is what we have to collect from. Second. That's not what I was looking for. Not this one. Employee. Okay, so process payroll forms. Every quarter, in addition to the taxes, which we discussed before we do, we also do filings because we have to actually, how do we pay the taxes? We have what's called 941s, employers' quarterly federal tax returns. Every quarter, this goes to the federal. And if you recall, we have what is our payroll liabilities? So let's look at the profit and loss. Actually, not profit and loss, we're looking at our balance sheet. And we have payroll liabilities of 291.26. Let's take a look by payee. Who does it go to? This is others. So this is more or less this 291.26 should be mostly the federal FICA taxes because we already said we tried to withhold everything. But there's a few little things that snuck through, those few cents on every person. So let's see how it works. Payroll center. If I would double click on the payroll tax form, oh, we didn't do it for 16 days. Things change very often. Okay, then as a reminder, this subscription will work for several more days if you want to review this. So review this section. Okay, so if I do last calendar quarter of last year, right, 12 quarter and 12/31. It's going to close out. You have to close out everything that's there. It's going to show me my form. What does it look like? What does this form 941 look like? So let's see here. If I was going to print, let's say I was going to print my records. Let's take it for now. Find out what's missing. Tax form only. I don't have a PDF viewer. Wow. Let's see this here. Let's see if it's gonna work. Let's just save the desktop for now. 941. Let's see, share, stop share. Let's see if it's gonna work. Okay, I could show you a form 941, but that's not going to help you from the report of QuickBooks. It's not, for some reasons that I can't get into right now. It's not gonna come up, but share. Okay. This is what a 941 is. This is where the name of the company would have showed up. This is the employees. We would have the three. We'll put the number 3 for the 3 employees that worked. You would have the wages and tips. We know that the amount was, say 1,000, 1,200. It was $1,500, right? 1,000 for Fishbane, 300 to fine, and 200 to Pinchas Tadris. So that was the gross. There was no federal tax withhold. We're doing this manually, so it's going to calculate 12.1%. Okay, this is a fillable form, so it's not doing the calculation by itself. If you were in QuickBooks, it would do everything for you, but 1,500 times 0.124 would be 186, and you're doing, right, 1,500 times 0.06, Social Security wages, Medicare 029. It's 4,350. So he puts 1,500 here. So this is, so for Social Security, you're taxing the 124, and by, what was the number here, 4,350. This is what we would be needing to pay to the government. 186 and 4,350 is about 229.50. What did we have before in QuickBooks? We had our report. Let's get out of this. And our balance sheet, our payables, Zoom, stop share or new share. Okay, our payroll liability is 291.26, and in our other report we had 223, and the difference is $70 are various expenses that are not to federal. It's where the company has to pay to other agencies, whether it's FUTA, whether it's state unemployment insurance, etc. Anyone raising hands? Anyone have questions? Or it's okay. You can let me know if you got completely lost in this class. We still have an hour. If anyone wants to ask questions, I could also do the poll, which is the last 8 questions which we discussed. Where's that here? Polls. Here we go. How do you add a user and password to a QuickBooks file? Gives you choices. And we have here 8 questions. And we'll give you till 9:10 to attempt to answer the questions. Okay, one more minute and then we'll we'll end the polling and we'll discuss the answers to this Quizlet. Mm, Okay, do we have one more person who wants to submit an answer? Right now we have just under 50% of responses. 10, 9, 8. Okay, let's share the results and discuss the question. So, how do you add a username and a password to QuickBooks file? So you could either edit menu or company menu and set up users. That seems to be the way to do it, right? We're dealing with, let's see, can I actually, no, I can't share screen. One moment. Go back into, one second. Share screen, let's see, we'll do it all. Let's see what you're seeing. You're not seeing the screen. You have to minimize it. But the correct answer, you go to company and you would go to set up users and passwords. Right, that's what it says. Okay, complete the sequence of events or quick of business activities. What happens after you create an invoice, receive a payment? That is also correct. I would like to make a deposit, but you have to receive the payment first. So if the question was, what do you do after you receive a payment? Then the answer will be you make a deposit. So the answer to question, as it shows here, 1 is B. The answer to question 2 is A. And we will go further. B and A. Okay. Next question. Complete the sequence of business activity. We did that. Payroll activities. After you put the time in and you pay the employees, what else do we got to do? We don't reckon after you pay employees, you need to, before process payroll forms, right? I was just showing you do payroll forms. The only way to do payroll forms is you have to pay the payroll liabilities. The answer is C. When you pay the payroll liabilities and you know that amount, then you can process the payroll forms, because together with the payroll forms, you're going to mail in a check to the government. The answer to question 3 is C. Cash inflows and outflows related to the company's primary business as cash flows from operating activities. Very good. That's what we discussed. Sales activities is part of operating activities. There's also financing and investing, but that's not the primary business, right? We invest money, we borrow money for the company, but that's the part. But primary business is operating activities. The answer to question 4 is D. Wonderful. Okay. Next question. We're halfway through. We have 3 more questions to go. To record purchases of furniture, finance with a cash loan. So again, what's going to happen? The furniture is going to be an asset. What happens when you get an asset? The asset becomes a debit. And automatically, you're left with a credit. Now, if it's a loan, we're not crediting cash, we're crediting a liability account. So the correct answer to question 5 is B. We're going to debit furniture asset. We got now a new furniture, and we are going to have a liability account for the loan. The answer to 5 is B. Let's see. Question 6, to adjust inventory to a lower amount, right? So if you're saying inventory is lower, what are we going to do? Well, inventory by definition is an asset which is debited. That's how it comes into existence. If you want to take away from the inventory, what you're going to have to do is you're going to have to credit the inventory. And for example, in a case where you say inventory is missing, has gone missing, that's why we thought we had inventory there, but it's not there. We're going to credit inventory and debit a miscellaneous loss expense, right? You can't have B. How do you have two debits? How do you have D? How do you have two credits? It's one debit and one credit. So that should tell you for 6, the only possible answers they should entertain is one that has a debit and a credit. So even A, that no one did, but that by definition could be a possibility before looking further. First thing to look, you should know, is there a debit and a credit? If it's two debits or two credits, it's a red herring. It's throwing you off, right? Good, so that's the answer to 6 is C. To record new service sales on account. So what's happening? We are getting revenue and we're getting receivables, right? Just like we bought something on account, we got a payable liability. We have new service sales on account. Now, we might create an invoice and QuickBooks is going to do it for us. When you create an invoice for a customer, automatically behind the scenes, QuickBooks is doing what? Well, the sale on account is a debit, it becomes a receivable. And the service sale is a revenue credit. Okay, so again, we cannot have option D because two credits, right? But let's look at the other three, which have all debit and credit. We know it's a receivable. Receivables come with debits. So A is out. Now, is it B or C? What's C? Is it a customer liability? Customers' liabilities are our receivables. It's the same thing. We don't owe our customers money, right? So it can't be debit, receivable, credit, liability, because we're not receiving from the customer and paying the customer. The only answer to 7 could be C. We debit the receivable and credit the revenue. That's sales. The income goes up. And last but not least, question 8. New cash purchases. Okay, let's see. So we have here B, so I got no one fell for that one. It's not credit and credit. But we have different types of debits and credits. It's not A because we're not crediting inventory. If it's new cash purchases and it's a cash purchase, so we're not debiting cash either. Remember, our asset cash is a debit. When we write a check, we're crediting cash. So once you know we're crediting cash, which is and we're debiting a purchase of an asset, the answer is actually the answer is C. It's a trick question because 8 says A, B, B, D, and it's really C. Okay, because a purchase is not an expense. So the answer of A is wrong because we're not debiting cash or crediting cash. D is wrong because purchases are not expenses. We have inventory, right? We have expenses, we have bills. The answer to 8 in this case would be the second B, but it should be really a C. Okay, so that's the stop share results for this one. And we will take your questions now. Not Adelis or Shacher, but if you have questions, feel free to ask. And thank you for joining. And again, if you have feedback, you could share it with the office. And I hope you've enjoyed this course. Again, if you want one more review class, going through it and discussing everything, which was on the first 4 pages, you could let the office know as well. Pools. Again, I have a question. What are the next steps regarding towards certificate or finding work? To get the certificate, we discussed there's an optional certification course giving by you should be in touch with FRIMA. Certification. 8 Accounting Training Unlimited. That's what it is. And they give you it's a third-party provider. We said we could also, if there's an interest of between 5-10 people, I guess they could make a group rate. But that you should be in touch with FRIMA regarding that. And finding work, well, you can add that certification. You can add to your resume that you took a QuickBooks course, and it'll be that much more valuable if you can say you have a certificate. Not by the person who gave the course, because that'll be self-defeating, right? That's why it's a third party. Okay, that takes care of that. And P, you're on the air. Anyone else who has questions, you can line up as well, and we'll get to you in turn. Hello?
Yes, hi. Okay,
Yeah.
so I understand basically the idea of the debits, the credits, what you debit, what you credit, but could you just review what is like the sense of, when do you go to banking, when do you deposit, when do you, like, I always seem to be missing out that part. Like, I never went to banking and did the deposit. So when do you do that? Like,
The best time to do it, like I told everyone, is that if you're dealing, if you're not in real life, when you receive the payment, deposit it. Just, you got the money, put it in your bank, and you'll see the money go up. In real life, don't deposit the money into your cash account until you actually put it in the bank, because it's going to give you a false impression that you have money to write checks against, and you'll be bouncing all over, right? I mean, it takes nothing. You go remote deposit. You don't have to go down to the bank. But after you put the deposit in, by taking a picture on your phone or whatever device you have, then you put it in QuickBooks, and QuickBooks will be able to deal with that money.
So again, so if you got, let's say, from a customer paid you some money, right?
Yeah.
So you would record that where? Let's say
You would receive payments. You got from a customer money. You receive when you
go to receive payment.
That way, again, did you invoice him or it's a cash sale?
Let's say you invoiced him.
Okay, so you have to wipe out the invoice. You have the receivable. So you're gonna receive a payment. On that customer, the only one that's open, I think, is Mr. Gabay, or maybe you have one that you didn't write off yet. And when you receive the payment, what QuickBooks is really doing is dumping the money into undeposited funds. It's like your cash register or your safe. You have an undeposited funds account, and it credited the receivable. So now receivables out. And QuickBooks is the only one that could make a deposit out of undeposited funds, because undeposited funds means you got it from somewhere. Because you can't just go to, say, make deposits. Okay, I'm taking money out of undeposited funds and I'm depositing it. No, QuickBooks had to put it on deposited funds. Otherwise, you could deposit $1 million in your bank from undeposited funds.
So why wasn't it possible, let's say, to, when the customer pays, to put it straight into the bank? What do you have to write
It
it?
doesn't. I'm telling you,
Deposit.
I'm telling you 2 reasons why. Because QuickBooks breaks it up, because that's the fact. If you're in a store and you sold for $100, can you write a check against that $100?
Again, what?
If you run a store and you sold fruits and vegetables for $100 worth,
Right.
and the customer paid you, can you go right now and write a check against that $100?
No, not yet,
Why not?
because it wasn't deposited yet.
So that's the same question that you asked me in QuickBooks.
Mhm.
QuickBooks doesn't put the payment into the bank. It puts it in a category called undeposited funds, because that's where it belongs.
So once you put it onto undeposit funds by customer payment,
It's automatically, QuickBooks puts it there. You notice every time you receive a payment, when you go back to your balance sheet, you'll see undeposited funds. We had the three. That's why I left the $3 sitting there for 6 classes as a reminder. Why is it undeposited funds? Oh, because we didn't actually deposit it.
so then you would save and close, and at that point you would go to banking and deposit it.
Again, in the QuickBooks course, that's what you would do. If
I'm
you're running a
talking-
business, you wouldn't save and close and deposit it. You would deposit it in the bank, and then you would record it in your QuickBooks.
So first deposit it and then record it.
You have to actually put it in your bank. You can't, QuickBooks can't think the money's in the bank and it's not, because I guess, why are you keeping books?
Mhm.
QuickBooks, the books is always after the fact, right? So customer gave you money, right? You're not going to record the payment before you received it. Someone gives you money and you record a payment. You're going to go and deposit it in the bank, and then you're going to record that you deposited it.
Okay, and I'm looking at customer payment. So there's cash, check, credit, debit.
And there's a
Right.
drop
So,
down. You can-
so if he paid, what is that?
I mean, you can add methods. You can have transfers. You can have quick pays, which is not a cash and check. Whatever you want.
So what does it mean, credit, debit, let's say?
A credit card, a debit card. But I would actually say that's the one instance where you could do it right away. If someone paid you with a quick pay or a transfer, the money hit your account immediately. So QuickBooks will put it undeposited, because that's how you record receiving it against an invoice. But in such a case, you can go deposit right away, because again, it's like you don't have to do anything. It happened for you. It's like that person already deposited for you in the bank. You know what I'm saying? Someone wires you in money against the invoice, then you could actually deposit right away, because it is in your bank. Hello? I think we just lost. Okay, let's go to Menachem. Hello?
Hi.
Yeah.
You hear me? Hi.
Yeah, sure.
I missed a couple classes and I was one, and I wanted to do Chazar and everything before taking the test. Is it possible to get the recordings of
You have to be in touch.
classes?
Be in touch with Firma. She's usually the
Is
host
it
during the
of
week.
every class?
Huh?
She has a recording of every class.
Of a good part of them. Actually, while I'm here, I can already stop this class recording, because